Hi traders, and welcome to Pepperstone's Technical Analysis Weekly Wrap on Friday the 13th of March. So it's definitely Black Friday on the markets. Friday the 13th is certainly playing its toll on all of the major indices. A lot of the major currencies are moving in very, very big moves. Gold, oil, everything is falling quite heavily. So I thought I'll do an early morning special on this to see if we can identify some key zones that we might be able to play a part in today. So we'll jump straight into the charts. So we'll start with the Aussie USD daily. So we can see we obviously had a really big move today. It's pulled back nearly half of its move of the period. So you can see it's actually retraced back up to that 63.70 area at the moment, but it did get to as low as 62.64 right here. So we have to go back quite a while to actually see the last time it came down here, and that was way back in the GFC during 2008, the lows of 2008. So, that's the support line. We drew that last week. We said that it was probably the target that it was going to if it did push down. And we can see here on a monthly chart even. I mean, if you're going to trade the monthlies, obviously you're going for the longer term, but you can see there's a big engulfing candle off a 20 moving average on a monthly chart, which is a very big deal. So it really did predetermine that move, and the target was fairly straightforward. So this is the key of drawing these big support and resistance lines from the monthly down, because you get to see these zones very clearly. So no one had any reason not to be taking take profit there at the 63-cent zone, even though it went a little bit lower, because it was a very clear target. But where this goes from here, and we would probably expect, depending on obviously world news, a little bit of a bounce from this level, which you've already seen. Could certainly retrace a little bit further, but this is GFC support here, so very serious support, and it's reached it fairly quickly, only in a matter of candles. So certainly one to keep an eye on, but I'd be looking for a change of trend on the smaller time frames, and by smaller I'm talking probably 4 hour or daily at the least now, because this has been a really big fall. Okay, the US dollar CAD is the next one we will look at. You can see here it's obviously gone through the roof. It's pulled back, in line with what the USD based pairs have actually done. You can see it reached a high here of getting very close to 140 when it spiked up here. It's pulled back down to around that 137 middle area after the big gap in that break of resistance. So it's been obviously a very difficult move to get into. If you weren't already long at the break of this resistance level here, it was going to be a very difficult one to get into, because it hasn't really pulled back at all. It's completely blown away the moving averages. They just can't keep up at the moment, and broken right through this key resistance here. So yeah, one of those ones where if you're going to take this one long, I'd like to be seeing a pullback to at least this level here, and then potentially just a roll reversal off this zone to potentially go long. But nothing doing until that actually happens, because it's really a guess as to which way this one's going to go until something meaningful happens from a technical standpoint. All right, we'll go to the euro pound. So the euro pound, I've started straight on the weekly chart, because we can see that we had a big weekly pattern setting up over the last several months. But you can see here that it broke this zone here now, well and truly completed, smashed through the 200. So this was a really sound technical trade. These double bottoms on big time frames work out really well at key support and resistance zones. You can see we had another one here that worked out quite well, obviously. This one has done exactly the same. So never ignore big patterns on monthlies or weeklies, because they are very sound. So we'll drop it down to a daily to see what actually did happen. You can see that the moving averages have now crossed, the 20 and the 50 have crossed. It came up, touched the 200 as we would expect. It's not just a 200 touch there, obviously. We had a roll reversal zone, which we expected would have found some sort of support and resistance. We can see that on the weekly. I'll take that out. You can see here that we've got a lot of support and resistance right through this period. So then we take that back to the daily, and we can see that lines up with the 200 moving average. Tested it, couldn't get past it on the first go, but then came back through and broke it well and truly. So it's certainly broken through a very key resistance zone now. One of those ones again that is looking quite long. So we'd want to be probably, if you haven't got in this initial burst, this initial break, because this would have been your entry candle, it would pay to wait for it to come back and retest this zone again before you get in long. You don't want to be jumping on a moving train until it actually pulls back for you, but certainly one to put on your alerts that if it comes back and touches this area now, which would be a roll reversal zone, we'll be off and trying to go long on that one. Okay, we'll move on to the US dollar yen. Again, this is one of those ones that's been fluctuating very, very heavily. It got to as low as 101, nearly 20, if you can believe it, earlier this week. It's pulled back quite sharply off that now and pushed up into the high 105s, 106. Again, a very unclear candle at this time. It's pretty much just after 4 a.m. Australian Eastern Standard Time, so the New York market is still well and truly in full swing and feeling the effects of a very, very volatile market, and this pair is no exception. You can see this daily candle is having a very, very big trading range of around the best part of 300 pips, sitting around the middle. We're going to have to go out to weeklies and monthlies again to find these zones that we're going to find any meaningful support and resistance. And again, it's one of those ones where even this on a monthly chart, you can see that when price is uncertain and the markets are very, very volatile, they do gravitate to these very key areas, these very key price points and previous historical very strong support and resistance. So you can see this line here. We'll draw that in. It's around the it's almost at parity. So you can see parity is just here, which is a 100. You can see that there was obviously very strong support and resistance over many, many months and years in the last 10 years. And it got very, very close to touching it. So, although it didn't quite get to it, it was only 100 pips off it. And considering it was at, the best part of 114 only not that long ago at all, got to the 112. We can see here, this is a monthly chart. So it got to basically broke the 112 only last month, which is only about 3 or 4 weeks ago now. It's been a very, very big drop. So you're talking about a 12-cent drop to get to parity. So it got very, very close. One to watch. You can see now it's returned to this level of support and resistance. Another very key zone for it, which is around that 105.50. You can see here that it was support, basically 3 or 4 times over the last couple of years on a monthly chart. So obviously a very key zone for it. Again, in the middle of nowhere here. I can't really, give any indication of whether it's going to go short or long. Obviously, it's set a precedent now that it could certainly get to these lows again. And if it's going to push higher, it's probably going to get into these highs here. So it's basically made a channel. We can trap that. We can trap price there. Basically, these are the highs we'd be looking for. And we'll put another vertical line and we'll keep this up for the coming weeks at around this current level here, which is another roll reversal zone. So it's probably going to find itself trapped in this zone. You don't want to be picking any long-term directions on this one. This is purely scalping to these levels on the smaller time frames and trying to identify good support and resistance, which we can see on the monthly and the weekly charts. But basically looking to trade within these bounds and taking short and sharp while the markets are so volatile. Okay, the S&P 500, you can see it's just been an absolute bloodbath over the last few weeks, and today was no exception. One of the biggest days we've seen in all of the drop. We can see it had its high of 27.70, a low of 24.91, which is just unbelievable. Like, you're talking about, nearly 10% moves. It would have triggered its circuit breakers a couple of times last night, where it pauses for 15 minutes. It's had a little bit of a recovery off its absolute lows, but you can see it's just starting to push down a little bit now. I don't even know where to start on trading this one. I mean, obviously it's come to this support line, which we highlighted last week, which is obviously this zone here that provided support way back in 2018. It's almost going out to monthlies. The price has never been up here right throughout the GFC, so we can't really use any guidance here. Only that in the falls of February 2018, it did reach the low 2400s. The next obvious support will be this level here, which is 2100. If it happens to break through this zone here and continue to fall, and look, with the markets the way they are at the moment, there's no indication that they're actually slowing down. This is probably the next logical target, and as unrealistic as that seems, another 300 points to get to 2100 isn't all that unrealistic, and it did take a very, very long time. Remember, this is a monthly chart, so this was almost 2 years worth of action here. At this level, it actually worked. It sat here from 2014 all the way to 2016, treating the 2100 level with enormous respect from the downside, finding resistance there. So it wouldn't be at all surprising to see it fall that low if it does break past this level here. And if it does, you would expect that it's going to find some very serious support here at the 2100. So that's where we have to project our lines, and we can move it. We can't even see it on a daily chart at the moment, but certainly one to keep an eye on for those traders who are looking to continue on with the short. But how to get into it is anyone's guess. It's very, very dangerous to be just jumping in. You want to be looking for a key reversal zone. I would like to think it could potentially get up to the 2800 again, and potentially maybe short off that if you are looking for shorts, to try and identify a good area to get in, and then maybe take it from there. But I wouldn't be going long on any of these pairs or indices until there is a very, very clear sign that this coronavirus is under some sort of control, and we see some stabilization in the markets, because generally when the markets are very, very volatile, until there's stabilization, the risk is to the downside, not to the upside. Okay, we'll have a look at a couple more. We'll look at gold. Gold has had a very, very big fall. The safe haven hasn't really played out as it generally does, which is generally a sign of market capitulation. When the markets are in absolute free fall, quite often you'll find that everything falls. Gold, oil, the US dollar, S&P 500, the whole lot. And that's pretty much what happened last night. You can see that we reached, this is a daily chart, you can see we reached the 1560 area again. Very, very key resistance and support zone. And this is what I said, back to what I was talking about earlier. When the market is in free fall, set those markers for potential reversals at the key points of support and resistance. And you can see here that it came back, basically touched it, and has retraced all the way back to nearly 1600. So this has been a big retrace. This is a $40 retrace, just today, just in the last couple of hours actually. So you can see, we can take that back to a 4 hour, you can see that it's been very, very short and sharp. This 4 hour candle has been very, very volatile. It's pushed all the way up to the 200 on the 4 hour. As you can see, that was previous support here as well. So it's that 1600 is a funny zone, because it's very difficult to predict where it could go from there. But one would expect that it should go and test these highs again. You would think, if it was going to provide the safe haven properties that it has most recently. But again, one of those ones that's going to be difficult to get into. Now, the trade was at the 1560, and if not there, certainly at the 1580, which is this support zone here, and resistance zone, which we highlighted a couple of weeks ago. Okay, we will move on to the EURUSD. Another one that has had a really, really big move. Obviously has had some serious selling off in the last few days. You can see that it reached as highs of almost touched the one. It did touch the 115 only for an instant. It's come right back down, got to 110.5 at its low for today. Very, very big candle. You can see it's nearly a 400 pip candle. Today's candle, sitting in the middle of nowhere. But again, what we want to be looking for are those key support and resistance zones. You can see that the 110.5, I'll pop a line there so it makes it a little bit clearer. That's the low that it reached, and once again you can see all of the key support and resistance right through history. Very, very key zone for it. Touched it. So once it's in free fall, look for those key support and resistance, and you could potentially trade off them if you're looking for short scalps. Now it's retraced back to the mid 111s. Again, another very key level for it. I can put a line here for you just to highlight that fact as well. And there it is. You can see that it was obviously very strong resistance there. So we would expect that, it's no surprise that prices reverted back to this level here. I'd be, we've got our ranges again. Don't try to be predicting directions on this long term. Just be looking for those scalps in between these bands. So move to the smaller time frames and try to highlight small changes of trend within these bands, and basically try and get your pips in and out in a minimal amount of time, so the volatility doesn't take hold and actually plays to your advantage. Okay, the last one we'll have a look at is the pound USD. We finally had a breakout here, actually. It's been a long time coming, but it did certainly break down and pushed very, very low. Actually, we got down to as low as 124.80, which is a very, very big drop, obviously, considering it was certainly shorting, and we've been talking that we wouldn't be longing this for any reason really other than a very decent change of trend, which you never got. Those channels were holding up. You can see those vertical channels were certainly holding up on the downside. Three very, very large shorting candles in the last 3 days. Obviously, we've got our world events that are causing this, coupled with all of the other currency pairs moving in very, very quick volatility and market direction. So no real surprise to see this move as well. But look, if it's going to retrace, it's going to retrace to probably the this level here. It wouldn't be a surprise to see it pull back to the sort of 27s. Again, no reason to be longing this one until we get that change of trend, but I would expect that it's probably going to pull up to the daily 200, which you'll find is also a roll reversal zone, which we can put down here. You can see here that it was very strong support in the past there, and obviously strong resistance around this level here. So it's a logical place for it to pull back to. So if you're looking for those scalps, set these resistance lines and support lines again, just go for them. It seems it's like a repeated story, but in a volatile market, that's the best way to trade, because that's how you're going to get your results in and out, and you're not going to get caught up in the mess. You'll basically be able to take advantage of the short and sharp moves, and hopefully aim for these key levels, because that's where price gravitates to when the market is very uncertain like it is. So I hope everybody's been able to capture the volatility that we've seen in the last few days in a positive manner. Again, I'll always say stop losses are very, very important in these unprecedented times. And if you're ever looking for a reason not to trade on a weekend, this will be the one, because if we've had this much volatility during the week, anything could happen on the weekend. So it's very, very important probably to just close out positions and just watch this one out, because stop losses can be completely blown out in very volatile markets when the market's closed for an extended period. And like I said, we're seeing 8% swings on a daily basis at the moment, and 48 hours of a closed market, anything could happen. So my advice to you would be to be closing out positions, or at the very least hedging them completely with a reverse position, so whatever effect happens on the Monday will be completely reversed, and you won't be any worse for it if you don't want to close out your trade. So I hope everybody has had a good week's trading, and have a great weekend, and I look forward to seeing you next week.